Good afternoon. Welcome to economictimes.com. This is the first of a webinar series on all things MSME. So on the first day of Navratri, which is September 22nd, effective from today, it's a GST bonanza, so to speak. So the four slab system, the GST slab system, which is 5%, 18%, no, 12%, 18%, and 28 is now down to 2, which is 5% and 18%. So joining us today are two specialists. We have Mr. Vinod Kumar Wuthoo, who's the president of the India SME Forum, and he's a self-described MSME evangelist. Hello, sir. So good to have you with us.
Pleasure's all mine.
And Mr. MS Money, who's a partner indirect taxes with Deloitte India, and he's been an expert in tax processes and systems for, I believe, 30 years and counting. Please correct me if I'm wrong.
Perfect.
So it's really great to have two, like I said, subject experts. And today, since we are talking about the GST reforms and what they will mean for Indian MSMEs, especially in specific sectors, we are looking especially at, I think, 3, 4. So let's just cut to the chase. When it comes to three-wheelers, small cars and commercial goods vehicles, the GST is down from 28% to 18%. What constituted luxury appliances at one point, which is ACs, TVs above 32 inches, monitors and dishwashers, that is also down from 28% to 18%. Your mass consumption goods, ranging from dairy to household products, are now under the 5% GST bracket, down from 12 to 18%. In textiles, we have carpets and man-made fiber and man-made yarn apparel, that is also down to 5%. Leather is down to 5%. There's a caveat here, though. We'll get to that later. Construction materials like cement, granite, marble, and fly ash bricks are down from 12% to 5%. Very critical in pharma and healthcare, you have life-saving drugs, some life-saving drugs that now have nil GST. And when it comes to thermometers, diagnostic kits, glucometers, clinical diapers, feeding bottles, test strips, those have gone from 12% to 5%. And education items such as, your stationery, some notebooks, and maps and globes, those are now also 0% GST. Like I said, not an exhaustive list, but let's cut to the chase. And I'm going to open the floor to both of you, Mr. Mani and Mr. Wuthoo. Right off the bat, when it comes to specific sectors like auto, electrical components, textiles, what do you think? Everybody has been talking about benefits being passed on to consumers, but what about the micro, small and medium enterprises, especially those who work closely with suppliers or who are suppliers? When it comes to input costs, how is it going to translate for them?
So the way I look at it is, when we look at MSME sector, what are the challenges that MSME sector faces today when it comes to GST? A lot of compliance. There is one challenge that is facing them, today. The other is too many rates. So when you manufacture something, you decide whether it will fit into the 5% bucket, 12% bucket, 18%, 28%. You do that. Each of these MSMEs, again, has got a lot of procurements to manufacture whatever they supply. Those procurements also may be in 5, maybe in 12, maybe in 18, maybe in 28. So MSMEs are not equipped to handle this level of complexity, or in a very different way, MSMEs would prefer focusing on their value addition, focusing on their niche area, what is it that they can do the best, instead of focusing on tax compliance. And what therefore this means for MSMEs is, in very simple terms, a goods and services tax has become a greatly simplified tax. And the greatly simplified tax has been introduced with a great sense of timing. It's just ahead of the festive season. Because for them, this now will be an area where they will not have to spend a lot of time, lot of money, lot of energies. So when the compliances have become simple, when for them there are fewer rates, and mind you, the fewer rates, as I said before, is not only on what they supply, it's also on what they buy. It's very easy to figure out what is the rate. It's either a 5 or an 18. 40 is an exceptional rate for very few products. So everyone needs to largely grapple with a 5 and an 18. If it's essential goods, food products and others, 5, all others 18. So when life has become very simple for MSMEs, they can possibly go back and focus on their main task, which is to build great products, provide services with a value add, find out some niche area which maybe larger firms are not able to provide. They can go back to their core competencies and focus on them. That is what I think this reform has done in one shot for all the MSMEs.
I completely agree with what Mr. Mani has said. You talked about 5 tax slabs. There was 0, 5, 12, 18, 28. Apart from this cess on certain goods and services, it was supposed to be one of the most complicated indirect tax systems in the world, which obviously did create a lot of challenges for taxpayers, also administrators. And overall, if you look at the number of companies, how many companies does it impact? So you're talking about almost 19 lakh odd companies that are registered under the Companies Act. Then you have almost 23 lakh registered partnerships, which are not under the Companies Act. You have close to 6 crore proprietorships, all of which we're trying to figure out how to navigate these multiple slab classification, etc. And if you look at the majority of the litigation around GST today, it stemmed from disputes over a clear cut, not a clear cut arrangement of whether the product or service should be taxed at 12% or 18%. So there was a lot of uncertainty, time wasted, legal cost, avoidable friction. Whereas today the rationalization will not only simplify the overall, I'd say, tax regime, but also stem these classification disputes, which were a very, very, very big pain, I'd say. So, for example, when you look at textiles and apparel, which is again MSME, a very big MSME base operates in that. The correction of inverted duty structures, along with the fact that we've got some export relief, makes it one of the most significant beneficiary sectors when it comes to MSMEs that are in garments, home textiles, apparel. So you will see an improved margin, smoother refund flow, which obviously means, we will have more time to do global expansion or become more competitive. FMCG and consumer essentials, majority of the products shifting into the 5% slab, consumers will definitely express, their happiness at the fact that they are now going to get an immediate price relief. But the fact is also that mass market categories which are there will directly benefit MSMEs which are in all of these sectors, because there'll be higher volumes. They're also we are hoping for the price drop will lead to many more people buying more. At the same time, what we also feel is that the overall burden of the price and the competitiveness for MSMEs will improve a little bit. As far as electronics, MSMEs are right now only at the bottom of the supply chain. So the moment you are looking at appliances, smartphones, etc., GST rates will improve affordability for the consumer. More importantly, the MSMEs in the component supply chain, retail distribution, after sales and service, they will gain new business opportunities from this expansion. And overall, what I find is, something that the government has done very, very well, which is MSME exporters that we're looking at how to stabilize their business, how to move it forward, they will stand to benefit from the faster refund system, which is the 7-day provisional refund mechanism, which we are all sure will ease working capital constraints. So you have better liquidity with lesser liquidity stress. You can allocate more resources towards scaling operations, exploring new markets, competing more effectively on price, whether it's the US, EU, Gulf, or the Asian regions.
Absolutely. I mean, when it comes to all the convolution, if I can call it that, that was there prior. I remember Mr. Mani has in the past also. I remember I've come across him saying that 12% slab especially was never supposed to be around for so long, and it's been a belated reform, if we can call it that, right? Coming back, and I'm going to bring this up to go with the flow, Mr. Wuthoo, you mentioned textiles. And the reason when I made the introduction, I said there's a caveat here, we'll come back to it later, is that textiles, now some categories have been, I think they've gone from 12 and 18, depends on which category, down to 5. But when it comes, now there's a thing that if, I believe 2000, any garments that cost over 2,500, those have gone from 12 to 18%, I believe. So there's an increase there. Now, one of the major associations, the CMAI, has actually appealed, saying that this should not happen because, winter is around the corner. And when it comes to anything that constitutes winter clothing, and especially for exporters, it's going to be a hit at a time when, we are staring down tariffs from the US. We are trying to diversify export markets. So do both of you can you please share your insights?
Well, you see, I don't know what it is going to take to satisfy everybody in the country. We are such a large and diverse country and an economy.
Mm-hmm.
But factually, when you go on the ground and you look at what is being sold in retail shops or online, whether it is a winter garment or a summer garment or any other garment, what you'll find is a majority of the products are sold under the 2,500 limit. I feel MSMEs will be very, very happy with what has happened. And overall, you see, majority of the countries always give a competitive edge in taxation to micro, small and medium enterprises. This has happened in this country for the first time, where an MSME product, which is, where he's unable to, most of the product that you are selling is to large brands who are then labeling it and sort of selling it ahead. What does the MSME eventually get? Maybe 20% or 25% of the MRP that the product is being sold at. So here, the MSME has the opportunity to sell the product directly into the market, obviously with a certain distribution additional cost, but he'll still be more competitive. There's so many textile imports, apparel lines that are moved in the 5% slab. So your inverted duty structure, which was there for many sub-segments, that will improve margins. It will also improve your export pricing.
Absolutely, right. And if I can change tack a little bit here and move on to Mr. Mani, please correct me if I'm wrong. It may excite you, paperwork, which is what a lot of enterprises actually want clarity on. So there were some questions that some businesses raised, for example, now, before and after 22nd September. Now, if you have had orders placed before, and what if it gets delivered after? There were questions around, well, what is the compliance mistakes we may make and how can we avoid them? So just as a starting point, can you give us some guidance on that?
Okay, so the key taxable event in GST framework is called supply of goods or supply of services.
Yeah.
But the event which triggers the tax is the supply. So if there is a manufacturer who has received an order prior to 22nd September, as long as he or she has not supplied the goods before 22nd, he can take the benefit of the lower rate of tax and after 22nd charge the new rate of tax. It does not matter on when he got the order. He may have got the order, in fact, 6 months back. It doesn't matter. If he makes the supply after 22nd September, now when I'm using the word supply, we have to bear in mind, this was a term that came into the tax lexicon in 2017 when GST was introduced. Prior to that, we used to use the word sale. We would say when you make a sale. The reason why the GST law used the word supply is in certain cases, when you make a supply to your own branch. So manufacturer in Gujarat has got a warehouse in Bombay and he moves goods from his factory to his warehouse. In the earlier definition, that was not a sale, because for sale, the ownership has to change. In the GST lexicon, the taxable event is the supply. So even when you move goods from your own factory to your own warehouse, that's also a supply.
Right.
So the key aspect here is if the supply happens on or after 22nd, then the manufacturer, the dealer, the supplier, one, can charge the lower tax, two, has to charge the lower tax.
Mm-hmm.
The GST law is very clear, and all the clarifications that have been issued subsequent to the announcement by the FM in the press conference, all the meetings that CBIC, Central Board of Indirect Taxes and Customs, all the meetings they have had have made it very clear that it is not optional to have the new rate of tax or continue with the old rate of tax. The prices have to come down. The new rate of tax has to be charged from 22nd. It's not optional to any business. So a manufacturer typically cannot say that my raw material is procured earlier, so I'm not going to bring down the tax. That's not on. That's not an option anyone has got. This is the law of the land from 22nd September.
Mm-hmm.
And from this date, any supply made by anybody, it could be manufacturer to retailer, wholesaler to retailer, retailer to customer, can be any leg. It has to be at the new rate. And the key event is supply, not when the order was placed, not when they started discussing it, anything. Equally, very importantly, if a supply has been made prior to 22nd September,
Mm-hmm.
then it has to attract the earlier rate of tax. And even if the manufacturer or seller has already given a benefit to the customer of the lower rate prior to 22nd, to the tax department, they have to pay the old rate of tax. So assuming 18% was the old rate of tax and the new rate of tax is 5%, if the manufacturer or the dealer supplied them before 22nd and said, look, now we know it's going to happen at 5, let me pass on the benefit in advance. Even if they have done that, the customer would benefit, but the tax liability would remain at 18% for supplies made till midnight of 21st September. From midnight of 21st September, which is when 22nd September starts, it is a new rate of tax which will apply. So anyone who wishes to know what is the rate of tax applicable to a particular product or service does not need to go and consult anyone. You don't have to ask 40 people. You don't have to check in social media. You don't need to start a WhatsApp group around that. You just log into the CBIC website, check the list of products, check the rates, and that rate that you see on CBIC is the Bible for GST. There's nothing beyond that. It is the Bible. And all MSMEs should actually be looking at the CBIC website more and more whenever they need clarity on a subject. Because the CBIC website is the final authority. And if you put this on social media, if you start checking with 10 people who are in the business, so we normally say that if you consult 10 consultants, you will get 10 opinions. And then you'll be confused. And then you have to go to the 11th consultant to know which of the 10 you should follow. The best way to avoid that, time-wise, money-wise, in all respects, go to the CBIC website. It's a very well-designed, well-developed website where not only the rates, but also the process, the procedure, the rights of the taxpayer, Everything is mentioned over there. That is what all MSMEs need to follow.
I completely agree with Mr. Mani. In fact, what we have told our members from a practical standpoint, businesses should create a short memo for every open purchase order to avoid ambiguity. The memo should clarify which invoice date will be applied, what the agreed customer price is, and should include a tax clause which explicitly states the tax as per law on date of invoice or delivery. Where a business has already promised, let's say, a fixed MRP or a contract, or is contractually committed to a particular customer price, it's obviously important to honor those commitments. So if honoring the original price is not commercially viable, then businesses should proactively negotiate a mutually acceptable amendment with the customer and document that agreement, in writing to prevent disputes. So this is what Mr. Mani said is absolutely on dot.
If I can ask, are things as black and white when it comes to, and this is another high interest topic for enterprises that has come up and people want to know more. When it comes to this anti-profiteering provision, so there were questions that came in about, so there were people asking, okay, now if there is a category where the GST has gone from 28 to 18 or 18 to 5, does that mean that we will reduce prices by exactly 10% and 13% respectively? What constitutes, what do I have to prove? What proof do I need rather to show that I have transferred price reductions, onto the customer, the benefits rather, and what constitutes an investigation under this new structure? How is it going to be implemented? Please, people, businesses really want to know.
Okay, so there can be two possible situations. One is when you make a B2B supply, and one when you make a B2C supply.
Right.
So when you make a B2B supply, typically you will be charging a price, which is the agreed price, and on top of that, you will be charging a GST. So in case of a B2B supply, the price that you charged is always excluding the GST, because the GST that you charge is available as an input tax credit to the buyer. So for B2B businesses, there is no confusion at all, because the price negotiated is always exclusive of taxes. And therefore, if you start your supply or invoicing from midnight of 22nd, you have to charge the new rate of tax. There is no anti-profiteering angle on those supplies, because what one person pays is what the other person gets as input tax credit. The question of anti-profiteering comes only in respect of B2C supplies. And in B2C supplies, the price charged to the customer is inclusive of GST. So when the customer looks at the price of a particular product, the customer does not distinguish between what is the value of the product excluding the tax and how much is the tax. So in case of those products where the price is embedded in, where the GST is embedded in the price of the product, the government has been very clear that the reason for reduction of GST, which is denting the government finances, is to give a benefit to the consumer. And therefore, in those products, there is no option left to the manufacturer, wholesaler, retailer of not passing on the benefit to the customer. If you have toothpaste and the price is 100, and the 100 was on the basis of an 18% GST, now the GST has come to 5. So what do? You say 100 divided by 1.18 into 1.05. Whatever is the value that comes, that has to be the new price charged to the consumer. No manufacturer, retailer, or dealer is permitted to charge anything more than this. If they charge anything more than this, it is something where they are profiteering, meaning a manufacturer is taking a benefit which actually should have flown to the consumer, which is not permitted. Now, very importantly, do we have a law to deal with it? Can there be a prosecution? Can someone be arrested? Answer is no. Because the law on anti-profiteering, which was section 171, is kept in abeyance from 1st of April 2025. Is that good? To my mind, it is brilliant, because what it means is that the trust that the government is reposing on industry as a whole is gigantic. I have not seen this kind of a trust being reposed by the government, by the CBIC on industry as a whole across the spectrum by saying, look, guys, we trust you. We know you're going to pass it on. And therefore, we don't feel there is a need to regulate the pricing. When you have a lot of competition, let's say one manufacturer does not pass on the benefit, it's going to be very temporary because then someone else will take the market share. Someone else will supply the same product and gain market share. And what is it that every business in the country today is extremely scared about? What is it that everyone wants to protect? They want to protect their market share.
Yeah, that would be like they say, missing the forest for the trees. I mean, just to hold on to a small benefit, you're missing out on the much, much larger picture.
Absolutely.
This may not be a compliance requirement. Like you said, there's no law, at least, you're not going to be reprimanded, if I can say, legally for it. But would you still advise, like, what advice would you give to enterprises in terms of, document, whether it is documentation, billing, any kind of like process, due process? How can they best adhere to this? Would you advise that they go out of their way to record this?
So depending on their customers and depending on their channel of supply, whether they supply through a physical shop, whether they supply through a marketplace, an e-commerce marketplace, depending on how they supply their products or services, what they should be doing is to just look at what is the tax inclusive price at which they are making a supply today, and what should be the tax inclusive price from 22nd of September. If they are able to do that and they come out with a revised number at which they supply, they document it, and they have invoices to prove that, look, till 21st, this is the price at which I supplied. From 22nd, this is what I'm supplying. That's good enough compliance. There is no reason for them to do anything else other than this. In addition, when you are supplying through a channel, so if the manufacturer is supplying to a distributor, who is supplying to a wholesaler, who is supplying to a retailer, if there is a supply chain involved in this, then what is required to be done is to submit a revised price list. And that price list, in addition to be given to the distributor, has also got to be given to the controller of legal metrology in the city or in the place where the manufacturer operates. And that submission is also an intimation. It's an FYI. It's not an approval. No approvals are required for this. It's just an FYI intimation. We have changed prices to keep it in line with whatever the government wants. Here is my old price product wise. Here is my revised price, FYI. That's it.
I always say that every MSME should maintain a clear and well organized audit trail for every relevant SKU or service that they are offering. Now, like Manisar said, he's talking about the fact that, preserve price list, revision notes, etc., along with effective dates, invoice level comparisons. We should also maintain a ledger of input costs and input tax credit statements such as GSTR 2B or GSTR 3B filings to establish, how tax credits have been claimed and applied. And for that purpose, we've also requested most of our members that please have an approval memo from the board or the owner, whatsoever might be the nomenclature of the firm, to record the firm's pass-through policy, which can serve as an internal evidence of intent, while records such as emails, notifications, etc. to customers and suppliers, they will demonstrate, okay, that we are being transparent. In addition, when you're talking about point of sale reports, you should show actual retail price movement and margin adjustments, as well as, like Manisar said, stock transfer documents for, branch transfer from one to the other, or from factory to the branch or factory to the retail store for goods supplied across, different states. All of these are essential for a complete record, and they should be at least retained for 5 years. So if at some point in time they are required, people should be able to pass, just promptly show it.
Excellent. So great tips from both of you. Now we've more or less covered the do's, what you should do. The last question I would like to ask you before we sign off is that please tell us about the don'ts now when it comes to the most overlooked implication. What should MSMEs avoid when they're doing their paperwork? What should they watch out for? And how can they possibly pass on, whatever benefits that are due to come now after 22nd September for their businesses? How can they best reinvest any savings strategically?
See, documentation is very, very important in GST. But when we talk of documentation, bear in mind, we are not talking of bundles of files and physical documents which you need to keep, tie it up and keep that. We are not talking of that when we say documentation. The document that is issued by the seller to the buyer acts as the supply invoice for the seller. The same document, the very same document, acts as the input tax credit invoice for the buyer. Therefore, at seller end, at a buyer end, if there is a modification in that document, that has to be done through a credit note. It is not something where you call that invoice back and cancel something in that and reissue that same one. When you do that, you're opening yourself for suspicion. So one of the don'ts is all documents on an electronic portal obviously have an audit trail for the GSTN also. Therefore, if you want to make a change, please make a change by issuing another document. An invoice can be modified either through a debit note or a credit note. Second don't, which you need to be very careful, is please ensure at all points of time that you pay the tax in time and file the returns in time. This has to be done because the GST is an interdependent system. When I'm selling something to you and you are buying from me, unless I pay the tax and file the return, you will not get the credit. If you don't pay the tax and file the return, the next person down the chain will not get the credit. So since it works through an electronic credit chain, each person there has to be very responsible in ensuring that the tax is paid in time, returns are filed in time. Please don't default on that due to any reason. So whether there is a shadi in the house, or whether there is an anniversary celebration, or whether there is Bihu or Chhat Puja or Diwali or Dashera, that's not a good enough reason for delaying filing the GST return. The GST return date does not depend on festivals in your house or festivals in the country. It is a prescribed date, which is the same date month on month. Please file it by that particular date. And third and most important, don't that everyone needs to remember. If at all the GST office asks you a question, an inquiry, even that comes through an email. There is an electronic communication. It's not a physical communication. When they ask you a question relating to what you have sold or relating to what you have brought, please respond to it immediately and truthfully, attaching the relevant documents. Don't get into a huddle by saying, should I share documents with them or not share documents with them? If you share documents with them, you are able to clarify their doubts, the matter gets dropped. Nothing more to be done. If you don't share documents, and they give you typically 7 days, 15 days, etc. to share documents. If you don't share documents with them, what happens is they get a feeling of suspicion in their mind as to why you're not sharing document. Because if you're above board and you've paid the tax in time, you have done the return filings in time, why should you worry about sharing any document? And what is the document they'll ask you? They're not going to ask you any, top secret confidential document. They'll ask you for your procurement or your supply or your tax calculation or input tax credit.
Fantastic. Mr. Wuthoo, Mr. Mani's advice is don't be late and don't be opaque. Do you have anything to top that up?
Well, there's a checklist that we've tried to look at for most of our micro, small, medium enterprises. So we are talking about you need to immediately do a full SKU classification and pricing refresh so that you can update your billing system, whether you are offline, online, wherever you are. Map every SKU, like Mr. Mani explained, from the CBIC website. Take that information, review the classifications of whether it's product, services, to confirm the current HSN or SSC codes and the revised rates which are applied properly. Do not skip the pricing or classification refresh. You should do that. You should compute, even for your own purposes, the landed cost and margin for each SKU or service. And specifically after the rate change, to understand the actual impact of pricing and profitability, and then decide what amount of tax savings or can be passed on to fully to customers, whether you are going to share it partially or absorb some part of it to strengthen your margin. That has to be a conscious decision in order to remain competitive. So whether you are using ERP systems, POS software, whatever mechanism you are using, whether offline or online, that you need to immediately look up and change. You see, what I figured out is a lot of the people that are selling online, they need to update their marketplace tax profiles and product listings. You need to have pre-filled, whether it's GSTR 1 or 3B flows. You need to test interoperability between the GSTR 2B, 3B and ITC claims. Also the pricing update. Please ensure whether you are clear about whether this is GST included or GST excluded labels. And, you also have an incumbent responsibility of training your staff, because whosoever is filing it and doing it is again going to do it on your behalf. So you are responsible for it rather than that person. Most importantly, you should revisit your cash flow forecast, whether you are taking into account faster refund or the possibility of temporary ITC mismatches due to old stock, new stock, and all the problems there, and whether you need any working capital additionally, or you have additional available that you can reinvest into other areas of business. And I always strongly advise every entrepreneur that please consult and sit with your chartered accountant or tax advisor and stress test your compliance system. Anti-profiteering provisions. It's not there in law today. Some point in time, somebody might raise the question and you might get stuck. So review all your exposure to those provisions. Design an optimized strategy that will minimize your risk while helping you maximize the benefit of the reform that has been brought in by the Modi government.
Excellent. So, razor sharp insights from the MSME evangelist and the indirect taxes expert, for lack of a better term. Thank you so much, Mr. Mani and Mr. Wuthoo. It was a pleasure talking to you, and I hope micro, small, and medium enterprises have a lot to take away and execute from everything both of you have just advised them to do. Thank you so much for joining us. It was a pleasure.
Thank you. It was such a pleasure.
Thank you.
very much.
Bye.